Okay, thank you. Good morning. Today what we're going to talk about is the dynamics of a mature market, if you will. And what we're going to really look at is some of the history and the evolution of the PET packaging market, focusing really on what's happened in Asia and then the effect of that on the United States and here in the NAFTA market. And then from that, kind of looking at what's happened in history, try to glean some things that we'll be focusing on as we move forward out into 2020. So to start out with, just to kind of ground everyone, this is the value chain for PET resin, and this is really what I focus on a global basis. And just some of the words we're going to be talking about today is, if you look at the value chain for PET, basically on the aromatic side, which is this side, comes out of a refinery. The first product we'll be talking about is xylenes or mixed xylenes, or as I get to talking with these acronyms, I may refer to it as MX, but that's mixed xylenes. Then from xylenes, you go into paraxylene, which is typically referred to as PX, or paraxylene. From there, you take paraxylene, and typically now, globally, take paraxylene, react it with acetic acid to form a product called PTA, or purified terephthalic acid. React that with ethylene glycol, which for most of you is antifreeze. And from that, you form polyester. And then depending on the downstream market you want to supply that polyester into, it could be fiber, PET packaging, or film. So today we're going to start here at polymer and then work back up the value stream and really take a few minutes to look at what's happened in the past and then potentially what effects that may have on the chain in the future. So to start, just to look at the global evolution of PET, we've kind of divided it up into 5-year segments and just kind of some generalities for those segments. From 2000 to 2005, if you look at the NAFTA market and the European market, the PET producers were primarily non-integrated. They were large merchant suppliers of PTA. If you look at Asia, they had a few very large integrated producers, primarily in Korea and Taiwan. And if you look at China back during this time period, the producers were really smaller and not largely integrated back into PTA. And as we ended 2005, the world capacity of PET was approximately 15 million tons, with about 34 million tons of PTA. Then as we entered 2005 to 2010 timeframe, the NAFTA and European markets began to consolidate, rationalize, but the level of backward integration back up the chain into PTA or even further back into paraxylene really remained unchanged. It was just a consolidation of PET producers and rationalization of capacity. If you look at what was happening in Asia during that time frame, there was continued expansion of polyester in Asia. And as we ended 2010, the world capacity was about 21 million tons. So we had about 6 million tons of PET capacity, and we're up to about 49 million tons of PTA capacity. In the next 5-year increment, 2010 to 15, we really, in the NAFTA region, saw a drive toward consolidation, rationalization, integration back into PTA really became a focus. In Asia, particularly in China, there was a massive overbuild of polymer and PTA, and the bulk of that was on an integrated basis. And because of that, we really began to see some trade changes, trade pattern changes on a global basis. So as we ended 2015, we had about 32 million tons of PET capacity. So we had about 17 million tons over a 10-year period. But if you look at PTA, we ended the year, that year at about 84 million tons, having added about 50 million tons over a 10-year basis. And what we're going to look at is really what the effects of those things have been as this market has matured. And as I said, then maybe look at some things, learn from that, and how they may impact the future. So we'll start with the polymer side on PET. This shows the global evolution of PET from 2006 through obviously 2016. This is history. this is our forecast for the future of what on the polymer side will be added. The key here is really, if you look at the purple area here, Asia, you can see that really this is where the market was growing. There was some growth, there is some growth in the Middle East, but the rest of the world really, for the most part, pretty much unchanged. There have been capacity additions in these other regions, but predominantly the growth was in the Asian markets. So if we look at Asia as a whole, which country, it's a big region, which country was really growing in PET over this time period? And obviously from the slide, the white is China. So that's where by and far the bulk of all this new capacity was added. And if you look at from 2006 to about 2010, we're on, kind of I would say somewhat of a reasonable trend line. But from 2010 through 2016, if you plotted these, the slope of that line, drastic change. So we had a massive amount of PET added in the region during this time frame. We also have a good bit being added in India, which is kind of the pink color here as we go forward. So we're adding capacity in Asia. Excuse me. So what's the effect of operating rates in the region because of that? From 2006 to 2016, the growth rate for PET in Asia, roughly 7.5% growth rates. But we were adding capacity so fast where up until about 2010, where that slope of that line changed, region was, 80, 85%, not a bad business. But the effect of all that capacity has really dropped it down into the high 60s to 70. And then we've got more capacity coming into the region over the next couple of years. That has been announced. Some of it continues to be delayed, but based on where we've got it in the models now, if they happen on the kind of the time frame that's out there, the good news is we're kind of at that trough for capacity in the region, again, assuming nothing else gets built. So we've seen a pretty substantial decline in operating rates in the region, and really that's had an effect on other regions of the world as this stuff tries to find a home. So what we're going to look at also today is kind of what is the effect of this overbuild on what I call variable margins if you're a PET producer in Asia. And by variable margin, I mean the red here would be the raw material piece for MEG or ethylene glycol. The yellow piece would be the cash cost for PTA to make that molecule of PET. The green would be the variable cash operating cost, kind of at a plant level. So what would be left after that would be shown in blue at the bottom. And as you can see in China particularly, even when this big massive overbuild happened here, that really was not, I would argue, not a great business to be in at that time. And so, for me, it begs, and this is where we are today, it's still kind of operating at or just a little bit above variable cost. So I look at that and I say, well, what was really driving a lot of this? Why were people continuing to invest in the market? Given that, I would say it doesn't look like something that would make sense to invest in. And we'll look at that a little bit more as we move back up the chain. But what we also want to do today is kind of compare and contrast the two regions. So if you look at North America over the same time period, back in the 2006, 2008 time frame, you basically had, for the most part, 7 large PET producers. And then there was a big restructuring in the industry in the 2011 going into 2012 time frame with Indorama making acquisitions, DAC making acquisitions, M&G announcing that they're going to build a big new plant. So where we basically went from 7 producers, we're down to 4. This is Salinas on the bottom, which today, you could argue should be up here in the DAC, piece of the bargain that they've got, I guess, roughly 51% of that company. But the U.S. North American market's gone through a pretty big restructuring in the hopes, I would assume, of improving margins on PET. This is, again, through 2016, is kind of historical operating rates in North America. This was when capacity was being added, primarily in Alabama, in Durama, kind of back in this time frame. Drop utilization's down in the 80s. This is where a lot of the consolidation happened, but surprisingly we saw, utilization rates drop. That's primarily the fact that there was some debottlenecking going on, and the growth in PET overall slowed, and the effect of imports into the U.S. had an effect on operating rates here in the U.S. There was some rationalization of asset in 2014 that helped utilization rates. They've been pretty steady over the past several years. This effect here is when we have Corpus Christi, the M&G plant, beginning to run. In my model, I've currently got it in the fourth quarter of 2017. And then, continued growth as we move forward with no additional capacity being added in North America. By the same view that we were looking at China, this is the blue again would be cash contribution, or that cash generated above a kind of a variable cost number in the U.S. If you look back in this time frame, that's not a bad business, pretty decent business. Obviously much better than Asia was enjoying. Then we see a pretty significant drop here, and I'll come back to that in a moment. But here's where we had the consolidation happen in the industry. We went from roughly 7 producers to 4. And as you can see, we really, as an industry here, haven't seen an improvement or get back to this kind of level with that consolidation. And we'll maybe talk as to what effect that may be. But I do just want to mention right here, kind of what happened right here from 2005 to 2006 that has, kept it at this level versus where we were back here. And this was primarily when Hurricanes Katrina and Hurricane Rita hit. It took a lot of PET capacity out of the market, took a lot of PTA, took a lot of paraxylene out of the market. So even if your polymer assets were not affected, you could not get raw materials to run. And the outcome of that was a lot of the brand owners and converters to continue producing preforms and bottles were forced to look outside the U.S. and started importing resin. So this is where imports, the market figured out, well, the quality of the resin is pretty good that's coming in. We can make good bottles with preforms. And as the U.S. producers then recovered from the hurricanes, and I was selling resin and in the industry back here, now you're faced with, I'm running again, but I've got all this competition from imports. And I would argue that effect from the hurricanes are still lingering, where imports into the U.S. are an issue. So on the way down, and I apologize for this is kind of consolidated, but on the way down, I went out and grabbed some of John and I's import data. On the left side of the slide here, this is for 2012, and I don't know if you can read it, but back in that time frame, there was roughly, I'm going to round it off to about 250,000 tons over a 12-month period that were being imported into the U.S. As a share of the market for this 12-month period is about 7.5% of the market. And then here we are today, only 4 years later, imports have almost doubled into the U.S. If I round that number to, say 500,000, but it's now about 10% or right at 11% of the market. In a few months through here, 14 and 15%. So, that's a big piece of what we're seeing here, is that there's no margin left, really, I would say no margin left in PET to try to push, this level of imports out or keep them growing. And really, what then a producer has to do is they have to start looking back at the chain. How are we going to do this? How are we not going to continue to sacrifice our market share to imports? So what I want to do now is just spend a few moments looking back at the chain. So if you're at polymer, PET, the next raw material increment you'd be looking at would be PTA, purified terephthalic acid. Say that 4 times quick. And this is globally what's been going on with PTA. And it's very, very similar to what we saw happen with PET. The purple or red area of the stacked bar is Asia, China in particular. So there's been a massive growth in this market, in this region, since about 2011, where the rest of the world has pretty much been stagnant. And then if we just look at Asia by itself, again, the white area is China, where they were growing, at a reasonable rate. We hit 2011, and it just really accelerated. Back in this time frame, when this first started happening, China was importing roughly about 6 million tons of PTA a year. By 2014, over a 3-year period, that had dropped to less than 100,000 tons. So what China ended up doing was they became self-sufficient, overly self-sufficient on PTA. But all of these people or these countries that were supplying China prior to that, now ended up with no market to export their product into. And what's the effect again on that for Asia, on PTA utilizations? This dip was the global recession. So really prior to that, Asia was running about 90% utilized. All this capacity gets built. We see this huge drop. More of it's coming. So unlike PET, where I think we're pretty much at that trough for PET and should see recovery, Asia's still got more capacity potentially coming. And there's going to need to be a good bit more rationalization in the region. There has been some, but needs to be more. So what's the effect on margins on the PTA side? Prior to the build in China, PTA was a pretty good business. So if I'm a PET producer in China, I'm not making anything on my PET. So where do I got to look? I look up the chain and say, wow, look at all the money that there was in PTA. The problem was they all overbuilt, gave it all away, and now PTA in Asia is basically running, at or just above variable cost. The other issue is all of this capacity, or the bulk of that capacity, with people with polymer backward integrated into PTA because they weren't making money on polymer. They wanted to capture this. So if you were a merchant seller of PTA, where you were just selling it to a PET producer back here, your customers disappeared. Those people that were, say, exporting out of Korea, exporting out of Taiwan into China. So the issue with China is we sit here today, no margin in PTA, no margin in PET. So if we look at North America, we've had some rationalization in North America as well. The yellow down here, DAC, Petrocel, with their acquisition of Eastman, picked up some PTA assets in Colombia. Back in 2013, 2014, they did shut a unit down, so we had some rationalization there. Cepsa here was purchased by Indorama, and then Indorama also purchased BP. So we've seen Indorama get further integrated back into PTA, as well as DAC, and then M&G's big plant in Corpus Christi, PTA coming with that as well. So, and I've got the PTA plant in Corpus Christi for the first half of 2018. So by 2018, if those timings hold, for the most part, the market would be fully integrated back into PTA today. Much, I would argue, for the same reasons we saw in China. If you remember on the PET slide, there's not a lot of margin left there. So this is operating rates in the U.S. This was, again, the recession here. Really big effect on polymer production in the U.S. Rebounded, and then slowing PET, polyester sales. We had an asset rationalized, which helped. And so as Corpus Christi comes up, we get an improvement, and then when the PTA comes up, if no other PTA is rationalized, we get a pretty big fall off in PTA utilization rates. So what's the effect there on PTA cost structure? Well, we don't know the effect of it yet. It's not here yet. But if you look at PTA margins in the U.S., been pretty consistent. Obviously much better than PET. So it's my belief that a lot of these companies are backward integrated into PTA, Because if they're going to capture that market share back, if they're going to put more product into the market, you know, there's not margin in PET, so, you know, this is where the margin is. And it'll be interesting to see what happens with this over time to, you know, if there's enough capacity rationalized on PET, then they probably hold on to most of this, which would be a good thing. Depending on how fast that capacity is rationalized, some of this may have to come out of the market to make room for that new capacity to push imports out. So how this evolves as we go forward will be interesting to watch. And then we'll just kind of wrap up with looking back up the stream in paraxylene. And the reason I put this in is because as we looked at Asia, you know, there's no margin in PET. They've given away whatever margin there was in PTA. So now you've got them looking even further back upstream. You know, is there a way to continue to move polymer by integrating further back? So this is PTA capacity globally. Been growing at a pretty reasonable rate. We did have a pretty big increase. It's hard to tell on the scale. Pretty big increase here in 2014. This was 2 big projects in Korea that came on. But the interesting thing to watch here, and we'll have to see what happens, is there's been a massive paraxylene facility announced in China. And this is, I've got it in for part of it in 2019 and then the rest of it in 2020. If it's, you know, it's still not a guarantee this happens, but if this were to happen, that's roughly an 8 million ton paraxylene complex. You know, that's what, 17 billion pounds of paraxylene. Today, China imports about 12 million tons of paraxylene. So if this gets built, they'll be, you know, they'll basically take back in the country 2/3 of what's being imported today. So this potentially could be the same thing we've seen happen on PET in Asia, PTA in Asia, and now potentially paraxylene. And if you look at that, this is the effect you get on operating rates in Asia. Again, today, you know, back in this time frame, they were really, really good business, but even today they're running, you know, 80% plus, pretty good margins. You know, what happens here? What's the effect here if this gets built? Does it look similar to PTA and PET? So if you're a paraxylene producer in Asia, you know, this is kind of the business you've been seeing. Really, really good margins in the 11, 12, 13 time frame. You know, this is $400 or $500 a ton over their variable costs. So just a really good business. What really drove this is all that PTA they got built during this time frame. Well, they wanted to run, so they're out buying paraxylene. So it's driving a lot of paraxylene production, and they got a lot of margin in it. Added capacity, we saw it fall off. No capacity has been added in the last year or so, so it's, you know, slowly improving, but still a very good business. If you look at North America, it's been running, you know, pretty good business here in North America too, in kind of the 80s. We have seen this big drop off from about 2013 to 2016. What that is back before that big build of paraxylene in Korea, the U.S. used to export a good bit of paraxylene to Asia. As margins came out of Asia, as margins came out of Asia after that build in this time frame, the U.S. producers really couldn't get there economically, so that's why we saw this pretty steep fall off in utilization rates. But as this Corpus Christi plant comes up, more PTA being run, the U.S. finds a home for it here, pretty good recovery, and then just, you know, normal growth with PET going forward. And on the same basis, if you look at what margins in here in the U.S., again, a good bit of margin on the paraxylene side. So just kind of to wrap all of that up, I know it was a lot of data, I'm running through it pretty quickly. But really, what I think, you know, learning from some of these dynamics as this market has matured and continued to mature, I think we'll see continued rationalization of PET globally. I think integration, you're going to have integration to be able to compete globally. PTA assets will continue to be rationalized, particularly if you don't have polymer because you're losing your customers. And the big question is, as I said, does PX, paraxylene, become a needed level of integration that you need just to continue to move the downstream polymer? And then you get into, well, what about feedstock for paraxylene? Now you're back up really close to a refinery, mixed xylenes. Mixed xylenes is also an octane enhancer. So you get into this whole thing of, if I'm running a refinery, do I let that molecule go to PET or do I keep it in the energy pool? If they're going to want to make PTA, they're going to have to buy it away, which is going to make MX prices go up. And then how close you are to those. And all of that will have some effects on trade. And I just wanted to introduce 3 slides here. We do have a new service. I cover globally, as I showed on the slide earlier, basically from the refinery to polymer. John's side of the business basically covers rigid packaging in the NAFTA region. We're now introducing that same level for Europe. So for Europe, we're going to cover 34 countries, basically divided into Western Europe and Eastern Europe. And it'll be the same type, and this is small, but basically what you'll get is this is by category, carbonated soft drink water, kind of volumes by year, a forecast, a quarterly, kind of what's been going on, and that will be by country. Same thing here, kind of, this is just looking at carbonate consumption by country. And PET's penetration, again, over those 34 countries in versus glass, aluminum, and other packaging options. So just wanted to throw that out that with that addition, you know, I feel really confident SBAcci can really give you the whole chain, and we're moving toward globally all the way from the refinery down into the consumer products company. So with that, I will say thank you.
Thanks, Steve. We got started a few minutes late, so I think we can take like 2 questions from the audience. If you don't have one, I got one. Put you on the hot spot. What about our new president? Is that 400 million pounds that's being imported at risk?
I mean, he certainly talks a game that it's at risk. You know, the issue is we had an action, anti-dumping action brought a year or so ago against China, Oman, Canada, and those countries. If you look at that one slide, those used to be some of the larger countries that were importing into the U.S. Put duties in place there, just switched to another region of the world. Imports are actually higher, they just moved countries. So with the new administration, you know, the focus would have to be not by country, but maybe by industry. And, you know, I just don't have the foresight as to where polyester or packaging would fall, you know, in that kind of decision. But it's certainly something to watch.
Steve, what does all of this suggest for the near-term future of BioPET?
BioPET, you know, the technologies have been there for a while. I mean, the technology to make paraxylene or bio-MEG isn't, you know, something that's brand new. The challenge there is being able to find the raw material, the supply and the economics of converting those new raw materials into paraxylene or monoethylene glycol that competes with petrochemical based. If you look at when crude oil was $100 a barrel, saw a lot of activity on bio. I mean, it made that hurdle easier to hit. At $30 to $50 a barrel, it makes it much more difficult. So then I think it moves more to, is it a consumer products company strategy to promote green? I'm personally of the belief that the markets are very, very efficient, and you got to be competitive on a cost basis. So I still think we're a good, probably 6 years or more away from those type products being competitive at crude oil in the $50 to $60 barrel range.
Thanks.
We better move on, so thanks, Steve.
Okay, thank you.
Ben.
Thank you very much, Steve.